Yes, students. Now we will start with a new chapter, that is chapter 7, which talks about cost accounting system. Guys, first itself I am telling you, most of the students finds it difficult with this chapter. Finds it difficult with this chapter because of journal entry, ledger and all. Clear? But I will try to simplify it as much as possible. First, we will discuss, sir, what is the concept? Then we will see what are the journal entry, what is the ledger accounts we are supposed to prepare. Then I will also try to connect it to cost sheet format. Actually, whatever journal entries we pass here, it is nothing but the sequence which we have prepared the cost sheet format. Constant format with minor changes, so if you guys understand the concept and then later if I am able to connect it to the cost sheet, then you will be thorough with it, guys. You will be thorough with it. There are different parts in this chapter. I will just divide it into three parts. Clear? One is first non-integrated, then integrated, then reconciliation. Like however you guys would have done BRS, huh? Same way here also there is some reconciliation, but reconciliation of profits between costing books and financial books. Okay, guys, the first two parts are important because that is where we find it journal entries and ledger. But I tell you, if you understand the first one, second one is done. Second one is done. Only minor changes are there. I will connect and tell what are the changes. Clear? So please make sure that you guys understand whatever we do in the first part very well. Very, very well done. See, even silence there. Even if I miss out the sequence, then you will not be able to understand later. So please make sure that you have that full attention from the beginning. From the beginning. Actually, it is easy. Just because there are number of journal entry, ledger accounts and all, students find it little difficult. Little difficult. But it should not happen for you guys. Sure. We'll start. Chapter 7, Cost Accounting System. Introduction. Before I read this, guys, let me explain. Guys, there are two sets of books. One is costing records, one is financial records. Now, if I am merging both and maintaining one set of books, I call it as integrated accounting system. Integrated. My costing and financial is integrated, sir. I am maintaining one records. Both for financial transaction as well as costing transaction. I am maintaining one records. Okay, now that means, sir, will I maintain two separate books of accounts? No, we will maintain one. We will maintain one. That means only one profit will be there? Yes, sir. Only one profit. The opposite to this is non-integrated. That is, this is normally what is followed in practical life because there is a difference between the treatment of transaction in costing and financial. I cannot merge both. I cannot merge both. But for academic purpose, it is covered for you, integrated. Whereas when I separate it both, means sir, financial transaction I am recording in financial books, costing transaction in costing books. We call that system as non-integrated accounting system, guys. Non-integrated accounting system. That means I am maintaining financial transaction separately, costing transaction separately. Sir, is it like completely different transaction? No, majority of them will be same only. For example, production cost will I record in financial statements also? Yes, I will record majority of the transaction in both the books. But there are few transactions which I may record only in financial books, but not in cost books. But not in cost book. At the same time, there might be few transactions which I will record only in costing books, but not in financial books. Or else there might be few transactions which I will record in both the books, but different amount. For example, depreciation. Sir, I am following SLM method in costing, whereas WDV method in financial. It can happen. Even for calculation of closing stock. Sir, in costing, I am following FIFO, whereas in financial records, I am following weighted average. Will the figures be same? No, figures will be different. Due to this, will profit vary? Yes. Now, as I am maintaining two separate set of books to record the transaction, respective transaction, I will have two profits. One is costing profit, one is financial profit. Will it be same, guys? No, it will not be same. At the end, I have to reconcile it. That is the third part of this topic. I need to reconcile. So reconciliation will come only under what? Non-integrated. Under integrated, is there any need to reconcile? No, only one profit is there. With what will you reconcile? With what will you reconcile? Now you may ask me, sir, under non-integrated, is both covered for us? Whatever we record in costing books as well as financial books? No. Whatever you will record in financial books, you already learned in accounts. You already learned in accounts. Any doubt in that? Huh? ಇಲ್ಲ ಇದ್ರೆ ಹೇಳಿ ಐ ವಿಲ್ ಕಾಲ್ ದ ಟೀಚರ್ ರೆಸ್ಪೆಕ್ಟಿವ್ ಟೀಚರ್ ಇಸ್ ಹಿಯರ್. Next, sir, whatever we record in cost records, it is there. It is a part of your costing paper. Is it clear? Yes. So I repeat, under non-integrated, there are two set of books. One is financial books, one is cost books or cost records. Whatever we record only in cost records, it's a part of our syllabus. Whereas whatever you record in financial books, you already learned it. Where? In accounting paper. In accounting paper, guys. Is that clear? Yes. Now, sir, what is the objective, sir? Please listen. All this will come one by one. Okay. I'm just giving some introduction. Sir, what is the main purpose? Guys, in costing, the main purpose is to find out, sir, what is the profit I have made from the production and sale of the goods. I am a manufacturer. I want to know what is the profit I have made from the production and sale of goods. So I will record only the cost of the product which is produced as well as sold. Clear? Anything not related to the product, I will not record it in my cost books. I will not record it in my cost book. So main agenda in cost records is to find out what is the profit I have made from manufacture and sale of product. And obviously in this process, I would have also calculated the cost. That is actually main objective. To calculate the cost and fix the selling price. Yes, sir. But when it comes to records, what is the objective is to find out the profit made out of the product. Okay, sir. Whereas in financial books, what is the objective, sir? The objective is not to calculate the profit from the product, but to calculate the profit of the company as a whole. As a whole. What is the profit we have made for a company as a whole? That means if there is any other revenue other than the sale of product, will be recorded? Yes. For example, dividend received, interest received, rent received, will we record everything in financial books? Yes. Credit side, we will record it? Yes. Sir. Whereas in cost books, we never record it. We record only what revenue? Sales. That's any other income, we will not record it. For example, let me give financial books. Sir, I have sold an asset. I have made a profit on the sale. Will we record it? Yes, we will record it. Where? In financial books, credit side. Correct? Yes. Coming to debit side. Sir, there will be some expenses not related to the product. Do we still record it in financial books? Yes. For example, interest paid, dividend paid, goodwill written off. Clear? All these are related to product? No. Do we still record it in financial books? Yes. Or loss on sale of fixed asset. Loss on sale of fixed asset. We all record it, but in cost books we never record it because it's nowhere related to my product. So due to this, will profit changes? Yes, my costing profit and financial profit will vary, guys. And more over and above this, I told you there might be few transactions which I will record in both the books, but different amounts. Different amount, especially depreciation and valuation of stock. Depreciation and valuation of stock. Okay. Same way, guys. There can be few transactions which is recorded only in costing books. Example is notional. Notional. Okay, notional. I may consider it to know what is the cost I would have incurred. I would have incurred. For example, notional rent, notional salary, all this. Even though I am not paid, can I consider it to calculate my total cost? Yes. But this is there only in cost. So in financial, can I consider notional? There is no concept of notional there. There is no concept of notional under financial tax. Is that clear? Yes. All this again I will repeat when I go to the third part, reconciliation. Because there when we are learning reconciliation, first we should understand why are we doing reconciliation? What is the reason for it? Clear? Whatever I just now explained, those are the reasons we will see again. We will see again, guys. Is that clear? Yes. So in the first part, what do you teach us, sir? Under non-integrated, in cost books. What are the journal entries we will pass? What are the ledger accounts we will prepare? We will prepare. Under non-integrated in which books? Cost records. Cost records. Sure, let's start. To operate business operations efficiently and successfully, it is necessary to make use of an appropriate accounting system. Such a system should state in clear terms whether cost and financial transaction should be integrated or kept separately. Kept separately, we call it as what? Non-integrated. Okay. Where cost and financial accounting records are integrated, the system so evolved is known as integrated or integral accounting system. In case cost and financial transactions are kept separately, the system is called non-integrated accounting system or cost control system. One and the same, guys. Say all this can be asked in MCQ. When it is kept separately, we call it as dash or it is called as dash. While non-integrated system of accounting necessitates reconciliation between financial and cost accounts, but no reconciliation is required under integrated accounting system. Why there is no reconciliation required under integrated? Sir, we maintain only one books, one profit. With whom will you reconcile? There is no need to reconcile. In cost accounting, the cost books are basically maintained under the two systems. Non-integral or non-integrated cost accounting, or we also call it as cost control system. Second one is integral or integrated cost accounting. Non-integrated accounting system. A system of accounting where two sets of books are maintained. One is for recording costing transaction. We call it as costing books or costing records. Second one is for recording financial transaction. We call it as financial books or financial records. This system is also known as cost ledger accounting system. Under such a system, the cost accounts restrict itself to recording only those transactions which relate to product or service are being provided. Hence, items of expenses which have a bearing with sales or production, or for that matter, any other items which are under the factory management are the only dealt within such accounts. This leads to exclusion of certain expenses like interest, bad debt. Bad debt, we have two options. Clear? We already discussed about it. Okay. Revenue income from other than sale of product or services. Clear? So you guys also in accounts, if you learned, there will be two heads there. Revenue from operations, normally sales, other like other incomes. Other incomes are miscellaneous. Correct? Those things will not come here in costing. Those things will not come in the costing guys. Okay. Principal ledger. Okay. Before I go through this guys, first let me explain each and every ledger so that you guys get the basics first. Clear? Later I will go through each one of them and again explain the ledger. Again explain the ledger. Guys, you need not take down anything. When you are supposed to take down, I will make you to write good content. Okay, in your notebook. Don't worry. But before that, please understand. Put your pens down. Just listen. You need not take down anything. I told you because I will make you write later. Just understand whatever I am explaining, guys. One by one. One by one. Before we go through this, guys, come on. Let me try to connect you to your accounts. Okay. Accounts, golden rules ಅಂತ ಏನು ಇದೆಯಾ ಅಲ್ವಾ what are the golden rules of accounting personal account ಶುರು ಹಚ್ಕೊಳ್ಳಿ start debit the giver, debit the receiver, credit the giver. Coming to real account, debit what comes in, credit what goes out. ಹೋಗಿದ್ದೋಯ್ತು ಬಂತು ಅಷ್ಟೇ. Next, nominal account, debit all expenses and losses, credit all incomes and gains. Okay na? Yes. For us, for most of the entries, guys, we will connect to this. Clear? Even if you are not able to connect also, you will understand, but it's good to connect. It's good to connect. Okay, chalo, one by one. First, let me discuss stores ledger control account. Stores ledger control account is nothing but raw material account. It is nothing but raw material account. Come on, guys. Raw material opening balance will be there. What is it? Asset or liability? Asset. Asset will have. Got it. Asset will have debit balance. So you will start with what? To balance brought down. What is it? Opening stock of raw material. It will end with what? Closing stock of raw material. Correct? If at all it is there. Sometimes it may not be there also. But majority of the cases it will be there. But sometimes they may not at all give it in the question. So ignore it. Okay. It will end with closing stock of raw material. Sir, you have written on the credit side. You know how to balance the accounts, na? Yes. Okay. Let me talk about it later. Sir, in between this, what will come, sir? Beginning you are telling, end you are telling. In between nothing, birth to death only that, no. In between life is there. Okay. So, guys, when I have purchased raw material but not used last year, I will bring it as opening balance of raw material. Okay, sir. During the year I will purchase. Yes. Anything I have purchased, I will debit it here. Anything I have purchased, I will debit it. Direct or indirect doesn't matter. Purchase and debit it here. Clear? Yes, sir. Anything purchased will be debited here. Don't write anything because I will explain later. I will make you pass journal entries and all and post it to ledger. Okay. Now coming to credit side. Sir, what do I do with this material? Now it is there with the stores department. Whenever the production department or whenever the respective department asks, they have to give it. Yes. If it is direct material, you have to send it to WIP control account. Which account? WIP control account. Guys, WIP control account is the account where production happens. It is like a production account. Clear? WIP control account is where production happens. Okay. So if it is a direct material, where will you send it? WIP. Sir, if it is the indirect material, send it to the respective overhead. Send it to the respective overhead. They would have given it in the question. Don't worry. So there are three overheads. What are those? Production overhead, administrative overhead, selling and distribution overhead. Three accounts would be there. If they have told 3,000 to administration, 3,000 to production, 2,000 to selling and distribution, send it accordingly. Send it accordingly. Hope you guys are getting it. Yes. Sometimes they may tell only indirect material 3,000. Please send it to production overhead. Production overhead. If they have simply told indirect material, send it to production overhead. Clear? They have told clearly 2,000 to production, 3,000 to administration, 5,000 to selling and distribution. Send it respective. Send it to the respective accounts. Hope you guys got it. Yes. Guys, when we purchased, balance increased or reduced? Increased. So debit what comes in? Debit what comes in? When it is going out, when I am issuing it, is it going out? Yes. Balance will reduce or increase? Reduce. So credit what? Goes up. Credit what goes out. Now whoever is receiving it, debit them, no? Correct. Direct material should be debited here. Clear? Indirect material should start. Okay. So indirect material should come here. Yes, sir. Same way. If by chance, if you have received indirect material here, also you credit debit. One more account. Administration is there. Production is there. Indirect material. Clear? Whoever has received it, debit. Clear? Yes, sir. Done with material. Done with material. Now at the end, whatever is the closing balance is closing stock. Guys, which side would be more? Debit side, it is an asset. Normally it will have debit balance. It will never have credit balance. Okay, sir. So it will have debit balance more. In order to tally, what do? We will write it on the credit side. Just to tally the account. Clear? Because some students get confused with that task. Sir, we are accountants. How can we get confused? Yeah, I agree. But still, some of them might get confused because when I ask this is what balance? They will tell credit balance. I will be like, because we are showing on the credit side, no, sir. No. We are just showing it as balancing figure here. Clear? We are showing it on the credit side just because why? Debit balance was more, sir. I cannot write it there. So I am writing it in the opposite side. I am writing it on the opposite side. So when I write balance carry down here, guys, what it denotes? Debit balance or credit balance? Debit balance. Very good. Hope you guys got it. Yes, sir. Now, guys, see if it is matching everything well and good, sir. If it is matching well and good, sometimes it won't be matching. Sir, they have given opening stock, closing stock, they have given purchases, they have given issue, everything is given, but still not matching. But still not matching. That means the balancing figure will be abnormal loss or abnormal gain. Will be abnormal loss or abnormal gain, guys. If debit side is more, then on the credit side it is abnormal loss. Abnormal loss. Debit side, loss will have debit balance or credit balance? Debit balance. So abnormal loss, where do you send it to? Come on, dialogue. Costing P&L account, sir. What is the entry? Costing P&L to source. Clear? No, sir. Credit side was more, sir. Then it is abnormal gain. Abnormal gain. We'll talk about what is abnormal gain and all. Too much we will not discuss here. It is in process costing chapter we will discuss because I will explain you there along with the numbers. Clear? So, sir, I expected some loss, but I regained it. That is called abnormal gain. Just remember that much. Okay. So credit side, if by chance it was more, we call it as abnormal gain. Where do we transfer it to? Costing P&L. On the costing P&L account, it will be on the credit side. On the credit side. Hope you understand. So, see, if by chance if closing stock is not given, normally that would be the balance sheet figure. No, sir, they have given that also. Accounts closed means nothing else. Clear? Debit side, credit side matching, sir. Game over, sir. Sir, opening balance is given, closing balance is given, purchase is given, issue is given, everything is given in the account. But still account is not tallying. Account is not tallying. That means the balancing figure would be either abnormal loss or abnormal gain. Guys, may not be there in every question. But if at all, if it is there, you should know. Na? Clear? I am trying to explain. Even journal entries, we will learn A to Z everything. Sir, will every journal entry come in the exam? For sure, no. Sir, which will come? I will also don't know. I also don't know. So be prepared for everything. Let them ask whatever they want. Okay, let us move to the next account. Hope you guys got it. Yeah. Second, wages control account. It is nothing but wage expense account, guys. Wage expense account. Will it have any opening balance? No, no, no. It is not an asset. Expenses. Okay. Sir, if at all, if there is any outstanding under, it may have opening balance, but nothing like that will be asked here. Don't worry. Okay, sir. Now, to what? Whenever we have incurred anything, we will debit it. Whether direct wages or indirect wages, only one entry. Only one entry. Okay, sir. Whatever we incurred, we will transfer it to the respective account. If it is direct wages, it will go to which account? WAP control account. If it is indirect wages, it will go to the respective overhead. If they are not given, send it to production overhead. If they only given production overhead so much, administrative so much, and filling and distribution so much, please send it to the respective accounts. Please send it to the respective accounts. At the end, guys, so this is direct wages. Then overhead, it is indirect wages. Oh, normally this will tally. This would tally. Debit side and credit side would tally. Sir, what if it is not tallying? Then the balancing figure would be wages paid for abnormal idle time. Wages paid to the abnormal idle time. In that case, debit side would be more, guys. Debit side would be more. Credit side will give credit to what? Costing P&L account. You will give on the credit side, it is actually giving debit to costing P&L account, but on the credit side of wages control account. So in costing P&L account, debit side to wages control account, wages paid for abnormal idle time. So here, will there be any abnormal gain under? No. That is only for materials. That is only for materials. If at all, if the guys, again I'm telling you, this may not be there every time. If at all if it is there, so debit side, credit side is not matching, then debit side definitely would be more. There is no chance of abnormal gain here. So that difference will lead to what? Wages paid for abnormal idle times. Oh. Next, coming to factory or production overhead control account. Guys, first of all, whatever is the indirect material and indirect wages, they will receive it. Yes, sir. Plus, we will also incur factory overhead, production overhead, any indirect expenses incurred in factory. What are those? We already learned in cost sheet. Okay, anything incurred. Let's see. Sometimes they only straight away give factory overhead incurred. Very easy. Come on, put it here. Sometimes they may not give directly like that. They may tell factory rent, factory supervisor salary. ಎಲ್ಲಾನು ಇಲ್ಲ clear. Sir, should I pass separate entry for each of that? No, better you show as the working note. Chances are less asking like that. Asking 5 overheads they are given which is related to factory. Add up everything and pass one entry here. Okay, because if you are passing 5 separate entries and all, it will take time. Yeah, but they are not asking like that, but I'm just telling you, if at all if they ask, you do like. If it is 1 or 2, then pass the individual entry, no problem. Yeah, yes. Then factory overhead incurred, we will debit it here. We will debit it here. Okay, sir. Factory overhead incurred. Incurred, paid. We will debit it here. Guys, now we have to observe it. Whatever is debited is what? Incurred. Now we have to observe it. Where do we send it? Factory overhead observed will be sent to which account? WAP control. Which is the next account? WAP control account. So we need to observe it now and send it to WAP control account, guys. WAP control account. Any doubt in this? Clear? Yes, sir. So it will go to WAP control account. Here also factory overhead observed. Factory overhead observed. Hope you understood. Yes. Sir, what if there is a difference between incurred and observed? We will discuss later. Okay. WAP control account is account where dash is happening. Production is happening. So here also we will start with opening balance and end with closing balance. WAP is again like an asset account. Clear? Opening balance will be debited. Closing balance will be shown on the credit side. It is the debit balance. It is the debit balance itself. Okay, sir. Then during the period, I would have received direct material. I would have received direct wages, debited. And factory overhead observed, debited. Now on the debit side, what is there, guys? On the debit side, what is there? Sir, all the production related expenditure plus opening WAP minus closing WAP. In cost sheet, we get something called as factory cost. But here we have to name it as cost of production. Because administrative will always come year after production. Yeah. So, sir, always here we will assume it to be general. Yes. Administration, we will always assume it to be general for this chapter. For this chapter. Clear? Yes. Now whatever we get is called as COP. What is it? COP, cost of production or cost of goods manufactured. Where do we send it, sir? Where do we send it? Let me write COP here in the amount. The amount is called COP. We will send it to finished goods control account. Product is ready to sell. We are sending it to finished goods control account, sir. Next, coming to administrative overhead control account. Sir, indirect material or indirect wages received will be debited here. Plus, if there is any administrative overhead incurred, debit it. Debited, incurred. Okay, sir. On the debit side, total incurred is there, including indirect material and indirect wages. Now, we have to observe it. Observe it. Who will observe this? Which is the next account? Finished goods control account. Finished goods control account will observe what? Administrative overhead tax. Now coming to finished goods control account. Is it an inventory? Yes. Inventory is an asset or liability? Asset. Will have what balance? Debit balance. Debit balance. Whatever is the opening balance of finished goods, debit it here. Show it on the debit side to balance brought down. If it's the closing balance, it is a debit balance, but I will show it on the credit side as balance figure. As balance figure. Okay, sir. In between, what will happen? In between, what will happen? For COP, we will receive it from whom? WAP. WAP control account. Okay, sir. Then administrative overhead observe. That also we will receive? Yes, sir. Simple guys. Listen now. Cost of production plus administrative overhead observed plus opening stock of finished goods minus closing stock of finished goods because it is on the credit side. That means minus only, na? Yes. What do we get here? COGS. Guys, please be careful. Only administration is different here when compared to cost sheet format. Clear? There we will treat, in the cost sheet chapter, we will treat it whether it is related to production or general. According to that, we will treat it. Clear? If it is related to production, it will come before cost of production. If not, it will come later. After COGS, it will come. After COGS, it will come. Where? In cost sheet. But here always it will come in only one place. Where is it? After cost of production. Before calculating COGS. Who will observe administrative overhead? Finished goods control. Finished goods control account. Okay, now, yes, sir. I repeat. Cost of production plus administrative overhead plus opening stock of finished goods minus closing stock of finished goods will give us what? COG. Where are we sending it to? Cost of sales account. We don't have a separate COGS account. We will send it to cost of sales account. Cost of sales account. Let them receive it. Okay. To finished goods control account. What is the name of this? COGS. COGS, guys. Don't get confused with the name. Sir, you are sending to cost of sales, but the name you are telling COGS. Yes, it is like that. Clear. Next, selling and distribution, guys. Here, if there is any indirect material or indirect wages, you will receive it. Plus, selling and distribution already incurred. Yes, sir. So, debit side total, what is it? Incurred. Now, credit side, you have to observe. Observe for which account? Cost of sales account. So, by COS, you will observe and send it to cost of sales account. Now, in cost of sales account, we will take this also. Selling and distribution overhead. Come on, guys. COGS plus selling and distribution overhead is now. The cost of sales. Whatever we have here is called what now? Cost of sales. We will transfer it to which account? Sales. Sales account. Hope you guys are getting it. Only see almost same cost sheet format with minor changes. Especially for administration. Especially for administration. Okay. Selling and distribution overhead. Done, sir. We have observed. So total is cost of goods sold plus selling and distribution overhead will be called as what here? COS. Cost of sales. We are transferring it to sales account. So COS. Name is what? COS. Amount is also COS. On the credit side, record sales. On the credit side, record sales. Okay, sir. I will record sales here. So you will either have profit or loss. Yes. Transfer it to costing P&L. Transfer it to costing P&L. Yes, sir. Hope you understood. Whatever profit or loss you have made, that is sales minus cost of sales. Transfer it to costing P&L. Now coming to costing P&L account, guys. What and all we would have debited here? What and all we would have debited? Abnormal loss of material. Wages paid for abnormal idle time. Or if there is abnormal gain of material, you would have credited. Clear? Plus whatever is the profit or loss, you would have taken it from here. Clear? Plus one more important adjustment. That is under absorption or over absorption, which I have not yet done. Now I will do. Clear? Yes, sir. Now coming to, guys, let me take any overhead. Okay, let me take this one. Selling and distribution overhead. Selling and distribution overhead. Sir, incurred is totally 1 lakh, sir. Incurred is totally how much, sir? 1 lakh, sir. But observed is 1 lakh 20, sir. That means you have observed more or less. Observed is 120. What do we call it as? Over absorption. Credit side is more or debit side is more? Credit side. So over absorption is having what balance? Credit balance. Hey, credit balance. Credit side is more, na? Credit side is more. So balancing figure is on which side? Debit side. But we will call it as what? Not balance. Credit balance. So what do we call it as? Over absorption. Send it to which account? Costing P&L. Costing P&L account, guys. Costing P&L account. This is over absorption. Over absorption. We have discussed what account balance will under absorption or over absorption will have. Sir, absorption is more, sir. So credit side is more. Yes. That excess credit is called what? Over absorption. Clear? Yes. Now let me take one more overhead here. Guys, assume here it is incurred 1 lakh, whereas observed is 90,000. Observed is 90,000. Under absorption or over absorption? Under absorption. Which balance it is having? Debit side, credit side. Excess balance is on which side? Debit balance. So what do you do with 10,000? Show it on the credit side as what? Under absorption. Where do you send it to? Costing P&L account. What do we call it as? Under absorption. Under absorption. Is that clear? So whatever we are sending here, 10,000 will reflect in costing P&L account. Which side? Debit side. Whereas over absorption will appear on which side? Credit side. These three accounts can have anything. Clear? See, if debit and credit is matching, no under, no over. Clear? Sir, incurred is equal to absorption. No problem. But if it is not matching, definitely it will lead to what, guys? Under absorption or over absorption. Is that clear? Clear? Yes, sir. Next, one more thing. Sometimes in the question, they would have given the open. Guys, listen carefully. If question is not starting with any opening or closing balance of under absorption, then any under absorption or over absorption, we will always transfer it to costing P&L. Clear? So in costing P&L account, we under absorption, we will record it on the debit side. Over absorption, we will record it on the credit side. Clear? Yes. Now, sometimes in the question, they will give opening balances for respective overhead, either debit balance or credit balance. So, in that case, we have to start the account with the opening balances. Yes, sir. So, for example, assume they have given credit balance. Credit balance 10,000. What it means, guys? Over absorption. When? This year or last year? Last year or last period. Clear? So, there was the over absorption of 10,000, but they have not transferred it to costing P&L account. They are not transferred to costing P&L account, because if they had transferred to costing P&L account, then we would have not had any balance here. Clear? Yes. So this is opening balance, over absorption. Correct? Credit balance. Next, this year whatever is incurred, whatever is observed, you will debit and credit. At the end, you assume you have any balance. At the end, it can be either under or over. Just because we started with over doesn't mean that we will end also with over only. It can be anything. It can be anything. Assume, guys, at the end we have under absorption only. What do? We will transfer it to costing P&L? No. Keep it as closing balance. Keep it as closing balance. As what? By to balance carried on. To balance carried on. Are you transferring to costing P&L? No. Same way. Guys, listen here. Sir, administrative overhead control account. Administrative overhead control account, they started with opening balance on the debit side, sir. What it means? Under absorption. When in the current period or last period? Last period. Did they transfer it to costing P&L account? No, sir. So that is why we have a balance. That is why we have a balance. You also follow the same trend. You also follow the same trend. Sir, we have started with opening balance. So that means we should also, if at all, if there is any difference at the end, we should end with what? Closing balance. Should we transfer it to costing P&L account? No, guys, we should not. We should not. Hope you guys are getting it. Yes. Now, assume incurred will be debited, observed would be credited. Sir, at the end, we have over absorption. Over absorption. Debit side is no. Absorption is more. There, did we write? Oh, chalo. So absorption is more. Let me put the number also so that it will be clear. Here it is 2 lakh. Here it is 2.5 lakh. 50,000 over absorption. 50,000 over absorption. Total I'm writing, including opening balance. Including opening balance. That means 50,000 balance is there here. Absorption. So we will send it to which account here? Nowhere, sir. Balance carried down. What do we call it as? Over absorption. Over absorption. Guys, let me go back here. Let me go back to this. Sir, let me put it with number, because this is over, not under. Over absorption. Okay. Sir, here 1.5 lakh is absorbed, whereas incurred is only 1.2 lakh, sir. 30,000 is over absorbed. Over absorbed. Okay, sir. Next, let me come to factory overhead. Excuse me. Sorry. Yeah, we started with under or over. Let me put it debit side. To balance, brought down. Under absorption. Debit balance means always what, guys? Under absorption. Okay, sir. Assume debit side total silent 2 lakh and year 1.8 lakh. Incurred is more? Yes, sir. Incurred is more. So that means 20,000 is what, sir? Closing balance. Closing balance. Debit side is more. So it is under absorption. Under absorption. Hope you guys got it. Clear? Debit side represents what? Incurred or absorbed? Debit side represents what? Incurred. Credit side represents what? Absorbed. This is accordingly decide. Credit side is more means absorbed more. Over absorption. Debit side more means incurred more. Means under absorption. Under absorption, guys. Is that clear? Hello? No. Sir, at the end, in costing P&L account, any balance is there. After recording all this, first what do we do? We will bring the profit from sales account. Yes, sir. Then under absorption we will debit, over absorption we will credit, provided we are not showing it as closing balance. Clear? Guys, please be careful. Only if they are given in the question opening balance, you will show closing balance. If not, it is understood that you will transfer under absorption or over absorption to costing P&L. Then, if there is any abnormal loss of material, record it here. If there is any abnormal gain, record it here. Both will not come simultaneously, anyone. Then wages paid for abnormal idle time, record it. At the end, we will have some profit which you call as net profit. Where do you transfer it to? General ledger adjustment account. General ledger adjustment account. Whatever is the final net profit or net loss, either of the two, you will transfer it to costing profit, sorry, general ledger adjustment account. Is that clear? Now, what is this general ledger adjustment account? One additional account which we will prepare in cost records only to complete double entry system. Only to complete double entry system. That means, sir, that is a special account for us? Yes. Guys, this accounts will represent or replace cash, bank, debtors, creditors. Now in your accounts, you know when and all you will use this now. Cash, bank, debtors and creditors. Sir, as we are using these names in accounts, here also if I use, then it will lead to confusion. It will lead to confusion, difference in balances and all. So let us not touch those accounts. Let us not touch those accounts. In place of them, which account shall we use? General ledger adjustment account. Simple, sir. Sir, I have paid any expenses. What is the entry, guys? Respective expenses to cash or bank? Yes. But here I will not credit cash or bank. Cash or bank. So in that case, what do we credit, sir? General ledger adjustment account. What do we credit? General ledger adjustment account, guys. Same way. Sir, I have made a sales. I have made a sales. What is the entry here? Normally we create debit. What? Cash, bank, debtors there. But here, what is the entry? Sir, general ledger to sales. General ledger to sales. Same way. Sir, I have purchased a raw material. What is the entry here? Stores ledger to general ledger. Sir, it is a cash purchase, a credit purchase. It doesn't matter here because this account represent what kind of cash, bank, creditors. Whether it is cash purchase or credit purchase, no separate entry. Same entry. Even for sales, whether it is cash sales or credit sales, doesn't matter. Only one entry. Is that clear? So this account represents, come on guys, it replaces what and all? Cash, banco, creditors, debtors. The main purpose, sir, why are we not using those accounts here? Because we are already using it in accounts. Here also, if I use, then it will lead to confusion. What is the cash balance at the end of the year? What is the bank balance at the end of the year? Debtor balance, creditor balance, it will confuse. Clear? So that is why we are using it differently. Even for, see, purchase of raw material, what is the account we will use in financial books? Purchases. But here, what are we using? Stores, ledger, control. Names. Do we record it there also? Yes, sir. Purchase of raw material, there also we record. As what? Purchases upon debit. But here, are we recording purchases? No. Means, are we recording it in the name of purchases? No. We are recording it in the name of what? Stores, ledger, control. Hope you guys are getting it. So here for wages also, we use the name wages control account so that it will not coincide and confuse us or confuse the users. Is that clear? Yes. Fine. And this account, listen here. It will start with opening balance and end with closing balance. It will start with the opening balance and end with closing balance. Opening balance on which side? Credit side. Opening balance on which side? Credit side. Guys, raw material, WAP and finished goods will have debit balance. In the respective accounts, how do we take it? How do we take it? To balance brought down. To balance brought down. Yes, sir. We will take it as opening balance, to balance brought down, debit side. But all those things put together, now you show it on the credit side. You can see opening stock of raw material plus WAP plus finished goods. Sir, there you shown on the debit side, here you are showing on the credit side just to complete double entry system. Just to complete double entry system. The main purpose of this account is to complete double entry system. Okay, this is an additional account which you have opened only to complete double entry system. Because for every debit there should be credit. For every credit there should be debit. For every boy there should be a girl. Okay, or for every leave. Next, closing balance. ಏನಾದ್ರು ಬೇಡ ಡೈವರ್ಟ್ control. Now, sir, closing balances. Closing balances of raw material, WAP and finished goods also will have debit balance. But in that respective account, we will show it on the credit side. Debit balance, but we are showing it on the credit side. Just to balance out. Just to balance the account. Same thing here, we have to show it on the debit side. We have to show it on the debit side. Opposite side, but aggregate figure. Raw material, WAP plus finished. Sir, in between you have left so much place, no, sir, for what? We will construct the house and stay there? No. So, what are those, sir? I told you, expenses incurred. For any expenses incurred, what is the entry? Respective expenses, overhead, wages control, to what? General ledger. So, we will record all those expenses here, expenses, so overhead, to stores ledger for purchase, so everything I will record it here. Okay, sir. Next, coming to credit side, what about it, sir? Sales. Normally, only one entry will come, that is sales. What is the entry, sir? General ledger to sales. So, I will record it. Clear? And at the end, madam, at the end, whatever profit is there in costing P&L account, where do we put it to? General ledger. Final profit, I told you, in costing P&L account, we will transfer to where? General ledger. Gain closed. Gain closed. Yes. At the end, every account has to be closed. Closed in the sense, either we will balance it out or we will show it as a closing balance. Balance carried out. Clear? Means we have to close it for the year. Close it for a year or period. Sometimes data might be given for a year, sometimes for a month and all. For whatever period they are given, we will close it at the end of that particular period, guys. Is it clear? Sir, what is the order of closing the accounts? Like however I explained now, same order you follow. Normally we write general ledger adjustment account first. Clear? Yes. But close it at the end. We will write it at the first. But while closing, close it at the end, guys. Come on. Tell me the name of the accounts in the order. I will help you out. I will help you out. Okay, generally we will take it at the end. First, which is the end? Stores ledger control account. Next, wages control account. Next, factory or production overhead control account. Next, WAP control account. Next, administrative overhead account. Then, finished goods control account. Then, selling and distribution overhead account or overhead control account. Next, cost of sales account. Then, sales account. Then, costing P&L account. Then, general ledger adjustment account. Clear? And it will go in the sequence, guys. It will go in the sequence. Come on. Let us see. Now let me check how good you have understood. First, sir, direct stores purchase or raw material purchase will be recorded where? On the stores ledger debit side. Debit what comes in. And when they are issuing it to the production, credit what goes out. For whom they are giving? If it is for production, direct material means WAP control. Where is the production happening? WAP control account. Very good. Then indirect material has to go to the respective overhead. If question is silent, send it to factory overhead or production overhead. One and the same. Okay, sir. Then closing balance, opening balance would be there. If at all, if there is any difference, that will lead to either abnormal loss or abnormal gain. Next, wages control. Whatever you have incurred or paid, whether it is direct or indirect, where do you record it? Debit side. Wages control on the debit side. Okay, what will be the entry? Wages control to general ledger. Anything paid, we will record it there. Oh, journal entry we will see, don't worry. I am just explaining the accounts. Now, direct wages for production, you will transfer it to which account? WAP control. Indirect wages means respective overhead. Question is silent means factory overhead. Clear? Normal accounts will close, but if there is any balance, then it is wages paid for abnormal idle time. Abnormal idle time. Where do you send it to? Costing P&L. Here never keep it as closing balance. Here never keep it as closing balance. It's only for overhead accounts what I told. If we start with opening balance. Okay. Next account is factory overhead control account. Whatever indirect wages or indirect material is transferred from there, receive it. Plus, if there is any factory overhead incurred, we have to record it on debit side. It is an expense account. It is an expense account. Debit all. Expense account, losses. Very good. Okay, sir. We will record. So on the debit side, what do we have total? Incurred. Now observe. Where do we send it to? Next account. Which is the next account? WAP control account. WAP control account. Now come to WAP control account. Opening balance, closing balance would be there. Asset. Clear? Plus indirect, direct material received. Direct wages received. Plus factory overhead observed debit. Clear? Now all this put together plus opening WAP minus closing WAP on the credit side. What do we get? COP, cost of production. Cost of production. Product is ready for sale? Yes. We are sending it to which account? Finished goods control account on the credit side. Clear? Yes. Next is administrative overhead account. Incurred would be debited, observed would be credited. Observed will go to which account? Finished goods control account. Finished goods control account. Now coming to finished goods control account, asset account. Asset account. So debit balance, opening balance, closing balance. We will show it on the credit side, but still it is a debit balance. Then whatever we have received, we will debit it. COP, cost of production, we have received from which account? WAP account. Record it, debit side. Plus administrative overhead observed is received. Record it on the debit side. What do we have now? COP plus administrative overhead observed plus opening stock of finished goods on the credit side minus closing stock of finished goods. What it will give you? Cost of goods sold. Where we have to transfer it to? Cost of sales. Record it on the credit side. You are sending it to cost of sales, but the amount is called as what? Cost of goods sold. Now, selling and distribution overhead incurred debit to observed credit to, along with indirect anything received. Okay, on the debit side. Observed, we will send it to which account? Cost of sales account. Cost of sales account. Okay, sir. Now, cost of sales account has received two things. Cost of goods sold from finished goods control account and selling and distribution overhead observed from the previous account. So what are we having now there? Cost of sales on the debit side. Where do we send it to? On the credit side, transfer it to sales account. Now sales account will receive this. On the debit side, cost of sales. On the credit side, record sales. On the credit side, you record sales. Definitely there will be either profit or loss. We normally call it as gross profit or gross loss. Different name here because, sir, we would have learned COGS. So for example, sales minus COGS is gross profit, no sir? Yes. But for this chapter, you consider for this chapter, sales minus cost of sales is gross profit. Okay, means whatever we get in sales account, what is that guys? Whatever we get in sales account is what? Either gross profit or gross loss. Gross profit or gross loss. I am telling you again, we are not deviating from our basic concepts. As per our basic concepts, such sales minus COGS is GP. But here we are taking it as sales minus what? Cost of sales as GP. Clear? So that GP we will bring it. If it is a GP, we will bring it here. If it is a GL, that is gross loss, we will bring it on the debit side and record all the special items. At the end, we will have what? Net profit or net loss. We will transfer it to which account? General ledger adjustment account first. Clear? So general ledger adjustment account will always start with opening balance of what and all? Raw material, WIP and finished goods on the credit side. And end it with closing stock of raw material, WIP and finished goods on which side? Debit side as a balancing figure. Clear? Yes, sir. Now, in between anything during the year, we will record it here. This accounts will replace what and all? Cash, bank, debtors, creditors. In your normal accounts, where and all you use this for? Instead of that, you use the general ledger adjustment account. Is that clear? Yes, sir. And in overheads account, incurred would be debited, observed would be credited. If debit side is more, then on the credit side we call it as what? Incurred is more or observed is less. So we call it as what? Under absorption. If there is no opening balance given in the question for any overhead, then you will transfer it to what? Costing P&L account. Costing P&L account. Sir, what if credit is more? What if credit is more? For example, observed is more than incurred. Over absorption. Over absorption. In that case, we will transfer it to costing P&L account. Costing P&L account. Yes, sir. Then, sir, what in the question if they are given? What in the question if they are given? Opening balances for overhead account. Even if for one account it is given, it is that understood that the company is following that trend. What is the trend? Sir, closing balance, they are not transferring it to costing P&L account. They are keeping it as closing. Clear, which they will carry forward into the next one. So what is your job? Whatever they are doing, consistency should be there. You should also follow the same. You should also follow the same. So for any one overhead account also, if they have given the balance, it is understood that closing balances they are keeping as it is. Clear? It's not like, sir, one account they will transfer, one account they will keep it as closing balance. No, no, no. Maybe assume only factory and selling they have given opening balance, whereas administration they have not given. It is understood last period it was incurred is equal to observed. Clear? Because what students may think is, for that too, they are following closing balance, whereas for administration, they are transferring to costing paid. No, they cannot do that. There should be uniformity, na? Yes. So, when opening balance of any overhead account is given, guys, take it as opening balance. At the end, if there is any under absorption or over absorption, just write it as balance carried down. Just write it as balance carried down. Don't transfer it to costing P&L account. That's all. This is all about the various accounts, guys. Sure. Now let me go back. Let me explain each of the account. General ledger I will come at the last. Yeah, come to the accounts. Accounts name. Just a minute. I will clear all this. Yeah, come back. Yeah. Silence. Let us start. Guys, one by one account we will discuss. Everything I already explained. Again, repetition. It's okay. Every day say you see your own face only, na? On the mirror. Did you ever feel bored? No. Chalo. Second. First I will take it at the end. On inchara. How you have closed, you see? You have to open the lock like this. Push it upside. Chala. Fine. Stores ledger. This account normally it will open with opening balance. Opening balance. That is opening stock of raw material. And end with what? Closing stock of raw material. This account is debited for the purchase of materials and credited for issue of materials from the stores. Guys, come on. If it is direct material, where will we send it to? WAP count. If it is indirect material, where do we send it to? Respective overhead. If nothing is mentioned, you will send it to production overhead control account. Good. The balance in this account indicates the total balance of all individual store accounts because we will not have number of stores also. Clear? So whatever is the closing stock of raw material, sir, what if I have 5 different stores? Then the balance of all the 5 stores put together, we will write it. Yeah, for academic purpose, will they give 5 and answer? No, I'm just telling you practically, companies may have number of stores. In all stores put together, what is the closing balance? They will record it. Abnormal losses or gains, if any, in this account are transferred to costing, profit, and loss account. Sir, can we keep that as closing balance, sir? No, you can never keep it as closing balance. Please be careful. Already closing balance of raw materials will be there. Again, you don't keep any abnormal loss or abnormal gain as a closing balance. You have to transfer it to costing P&L account. Then, sir, you told something before this, no, sir. That is for overhead account. That is for overhead account. There we will have 2 options depending upon what they have given in the question. If they have given opening balances of the overhead account in the question, then the treatment would be different. No, sir, they are not given. Then under and over absorption will be transferred to costing P&L. Whereas in stores ledger, if there is any abnormal loss or abnormal gain, you should always transfer it to costing P&L account. Next, coming to wages control account. This account is debited with total wages paid, whether it is direct or indirect. We will record it on the debit side. We will record it on debit side, guys. We will record it. Sir, is there a separate entry? No, only one entry. Clear? Whether it is direct or indirect, only one entry. Okay, sir. Direct wages are further transferred to what? Work in progress on the credit side. We will send it to WAP. And indirect wages to respective overhead account. Wages paid for abnormal idle time are transferred to costing, profit and loss account. Either directly or we can prepare a separate abnormal loss account. Better transfer it straight away. Better transfer it straight away. Okay. Because what happens sometimes we can separately prepare abnormal loss account. Any abnormal loss, we will transfer it to abnormal loss account. And from there, whatever balance is there, we will transfer it to costing P&L. Unnecessarily one extra account. Unnecessarily one extra account. Coming to manufacturing, factory or production overhead control account. This account is debited with indirect cost of production such as indirect material received, indirect labor received. Because if they have given, they would have credited. Because they have given, so credit what goes out. I am receiving it, debit what comes in. Okay. Overhead recovered is credited to this account. But where do we transfer it, guys? Manufacturing overhead absorbed, we will transfer it to which account? WAP control account. Next account. Whenever absorption is happening, transfer it to next account. The difference between overhead incurred and overhead recovered, that is under absorption or over absorption of overheads, is transferred to costing, profit and loss account or overhead adjustment account. That is also additional account, not required. Not required. What if we prepare at the end? I will cover it. At the end, we will cover it. Okay. So straight away under our over absorption is there, where opening balance of that is not given in the question. Transfer it to costing P&L account. Next, WAP control account. If you want, you can write production happens here. Production happens here. So this is also an asset account. So it will start with opening balance and ends with closing balance. What balance? Debit or credit balance? Debit balance. So two balance brought down. Two balance brought down. And we will debit what and all? Direct material received, direct wages received, factory overhead absorbed. Factory overhead absorbed. This account is debited with total cost of production, which includes direct materials, direct labor, direct expenses. This is also important. If there is any direct expenses incurred, we don't have a separate account for it. Straight away record it in WAP. Straight away record it in WAP. For example, royalty paid on production. Okay, direct expenses are designing charges. Straight away record it in WAP control account. What is the entry? WAP control to general ledger. General ledger adjustment account, because cash paid or bank paid, where do we record it in? General ledger. Hope you guys are getting it. If it is direct expenses, we don't have any separate account for it. We don't have any separate account for it. Where do you record it? Straight away in WAP control account. Then production overhead recovered and it's credited with what? Cost of finished goods completed, which is nothing but cost of production. Where do we send it, guys? From goods are ready to sell now. We are sending it from WAP control account to finished goods control account and transferred to finished goods control account. The balance in this account represents the total balances of job or work in progress as shown by several job accounts. So on the credit side we write, it is actually debit balance, but on the credit side we write by balance carried out, which is nothing but closing stock of WIP, guys. Next, coming to administrative overhead control account. Guys, always considered to be general year. Always considered to be general year. It will always come after COP. After COP, but before COGS. But guys, listen. After COP, but before COGS. Okay. This account is debited with overhead incurred and credited with what? Overhead recovered. And this account also will be debited with any indirect material or indirect wages received. Indirect material or indirect wages received, guys. Oh. The overhead recovered or observed are debited to what? Finished goods control account. So on the credit side, we will show finished goods control account. So what is the entry? Finished goods control account debit to administrative overhead control account for observed. Okay, sir. The difference between the administrative overhead incurred and recovered is transferred to costing profit and loss account or overhead adjustment account. Next, we have finished goods control account. It is an asset account. It will start with opening balance on the debit side. To balance brought down. What is it? Opening stock of finished goods. And it will end with closing balance. On the credit side, we show, but it is debit balance. Okay, sir. In between, what will happen? This account is debited with value of goods transferred from work in progress control account. What is that name called? COP, cost of production, and administrative cost recovered or observed. This account is credited with cost of goods sold and transferred to cost of sales account. Name of that is called COGS, but we are transferring it to cost of sales. Guys, there you might get confused because the amount is different, but we are transferring it to some other account. I stressed on it. Clear? Yes. The name is called COGS, but we are transferring it to cost of sales account. Yes, sir. And there is no COGS account. There is no COGS account. At least remember that it will be helpful for you so that you will not get confused. This account is credited with cost of goods sold and transferred to cost of sales account. The balance of this account represents the value of goods lying in hand. That is at the end. Finished goods closing stock. Selling and distribution overhead control account. This account is debited with selling and distribution overhead incurred and credited with overhead recovered. The overhead recovered or debited the cost of sales account. The difference between incurred and recovered overhead is transferred to costing profit and loss account or overhead adjustment account. Next one is cost of sales account. Now on the debit side we already received two amounts here. What are those? COGS, which is transferred from finished goods control account, and selling and distribution overhead observed. We have debited two items. Now what is this figure called? Cost of sales. So we are transferring cost of sales to from cost of sales to sales account. This account is debited with cost of finished goods transferred from finished goods control account. We will record it on the debit side. Guys, simple agenda. Debit what is received. Ashte. Anyone who received debit what is received. Now I am giving it. I am transferring it. Credit what goes over. Stay here. For sale as well as with the selling and distribution overhead cost is recovered. The balance of this account is ultimately transferred to sales account. Now coming to sales account. On the debit side, what do we record? Cost of sales. Name is also cost of sales. Amount is also cost of sales. This account is debited with cost of sales and credited with what? Sales value. The balance in this account is transferred to costing profit and loss account as profit or loss on sale. Okay, sir. Overhead adjustment account, I will cover it last. That is extra account. If you want, you can do it. If not, ignore. What do you suggest, sir? Ignore. Straight away. Whenever there is under absorption or over absorption, where do you transfer it to? Costing P&L account. Yeah, coming to costing P&L account. This account is debited with under absorption of overheads, abnormal loss of materials, wages paid for abnormal idle time, loss on sale if any. That is gross loss. It is credited with over absorption of overheads, abnormal gain of materials, and profit on sale price. The net profit, that is the last balance. The net profit or loss in this account is transferred to general ledger adjustment account or cost ledger control account. Guys, come on. Whatever profit we get in sales account, what do we call that profit as? There should be difference in name now. What do we call it as? Gross profit. So gross profit or gross loss, we will transfer from sales account to cost and P&L. Then in cost and P&L account, we would have recorded under absorption, over absorption, abnormal loss, abnormal gain, everything. At the end, whatever we have is called is what? Net profit or net loss. Guys, please be careful. There is some differences here what we use. I am highlighting those so that you will not deviate from your concepts. Actually, what is gross profit? Sales minus COGS. But here, for this chapter, we are taking it as what? Sales minus cost of sales as GP. That is gross profit. Clear? See, sometimes they just use the word profit also, that is fine. But sir, two profits is there, and we have to differentiate it, right? What we get in sales account is one profit, another is what is recorded in costing P&L account. We have to differentiate it. Now. Clear? Or else alternate treatment also is there. What is alternate treatment? You can ignore completely sales account fully. You can ignore sales account. That means whatever cost of sales, you transfer it to costing P&L account. Transfer it to costing P&L account. On the debit side, you will record cost of sales. Yes, sir. Credit side record sales. Credit side record sales. Okay, sir. And I'll record all abnormal loss, abnormal gain, no under absorption, over absorption, everything you record. At the end, only one profit. Only one profit is called. That is called net profit. You will transfer it to where? From costing P&L account to general ledger adjustment. Hope you understood what I told. You can ignore sales account. Straight away transfer cost of sales to costing P&L account. Record the sales there on the credit side. And ultimately, whatever profit or loss is there, transfer it to costing P&L account. So in this case, only one profit you get. Only one profit. Okay. Now come to the first account. We left it now. General ledger adjustment account. Guys, MCQ can be asked. Which account will be opened under non-integrated in cost books to complete double entry system? General ledger adjustment account. This account is also known as cost ledger control account. See guys, for few accounts, alternate names will be there. Sir, which name should I use in my answer? Which name they are using in the question? Same name you use. Clear? For example, for stores ledger, we also call it as material control account. Material control account. Now, assuming the question they have used material control, you also use material control. Assuming they have used stores ledger, you use stores ledger only. Even for factory overhead, okay, there are three names for it: manufacturing, factory, production. So, should I use all three names in the question? No, no, no. Sir, in one entry, one name. Don't do that because you are opening different accounts. Clear? Sir, which name should I use? Whichever name they have used in the question. Obviously, in the question, they would have used any one name. Any one name. Clear? Yes. For this also, they would have used either general ledger or cost ledger. Respective name only you use in your answer. This account is made to complete double entry system. All items of expenditure are credited to this account. What would be the entry, guys? For any expense, for any overhead, what is the entry? Overhead account, expense account, or wages control, whatever it is, to general ledger adjustment. All items are okay, that is done. Sales are debited to this account, and net profit or loss is transferred to this account. Come on, guys. Sales, what is the entry? Credit sales or cash sales, doesn't matter here. Only one entry for both. What is it? General ledger adjustment account to sales. Clear? Now at the end, whatever profit is there in costing P&L account, we will transfer it to this account. Yes. What is the entry for it? Sir, credit side is more. That means, how do we close costing P&L account? Credit side is more. General ledger to costing P&L. Sir, debit side is more. Loss. How do I close? Credit. So, general ledger to costing P&L. I repeat. Sir, credit side is more. Costing P&L account. How will I close it, sir? By debiting. What is the entry? Costing P&L to general ledger. So, profit. Sir, what if it is a loss? Debit side would be more. When debit side is more, how will I close it? By giving a credit. What is the entry? General ledger to costing P&L account. General ledger to costing P&L account. Is that clear? Yes. The balance in this account at the end of the particular period represent what? The net total of all the balances of closing stock. All the balances of closing stock means what and all? Write it in the bracket. Raw material, WAP plus finished goods. Plus finished goods. Raw material, WAP plus finished goods. Rohit, wrote. Done? Got it? Yes. So we learn, sir, whenever there is an under absorption or over absorption, we straight away transfer it to costing vendor. But they have given one option. You can transfer it to overhead adjustment account, and from there, final balance you transfer it to costing vendor account. For example, I am maintaining a separate account, sir. Assume this is overhead adjustment account. Okay. So whenever under absorption is there, you debit it. Whenever over absorption is there, you credit it. And final balance, whatever either debit or credit balance, transfer it to costing vendor. Means to record under and over absorption, we are maintaining a separate account as well. Clear? So in the respective overhead account, whenever there is under absorption or over absorption, where do you transfer it to? Overhead adjustment account. Here you will receive it. Whatever is the final balance here, you will transfer it to costing P&L. Sir, do you suggest it? No, not required. Until and unless they specifically asking the question, you don't do it. If question is silent, always straight away transfer to costing P&L account. Is that clear? Yes. So this is all about the concepts. Still now what we have learned is only concepts. Now what are we supposed to learn? Journal entry and ledger accounts. Already we are done, no sir? Yes, almost we are done. We're done with everything now? Okay, let me read this account first. Overhead adjustment account. This account is to be debited for under recovery of overheads, that is under absorption, and credited with over recovery of overhead, that is over absorption. The net balance in this account is transferred to costing, profit and loss account. Note, most of the time, under absorption or over absorption of overheads is directly transferred to costing, profit and loss account instead of transferring it to overhead adjustment account. Is that clear? Yes. So this is all about the accounts. So I want you guys to go through before I get into the journal entries and ledger accounts. I just want you guys to go through once so that when I'm passing the journal entries and we will also post it to the respective ledger accounts, you should be thorough. You should be thorough, guys. We have discussed all of them, but still go through this accounts once. Whatever theory I have given, just go through it once.